If you're thinking about starting trading in 2025, stop scrolling for just a few minutes because this video could save you years of wasted time, thousands of dollars in blown accounts, and endless frustration. Today I'm giving you a complete beginner's roadmap, exactly how I'd start trading in 2025, and we're going to settle a big debate. Which method is better, VSA, SMC, or ICT? By the end, you'll know which one fits you best. Before you even touch a chart, you need to set up the basics. First, pick a regulated broker or crypto exchange. Don't chase sketchy offshore platforms just because they offer crazy leverage. Safety first. Second, understand risk management. Never risk more than 1 to 2% of your capital on a single trade. If you start with $1,000, that means each trade's maximum loss should be around $10 to $20. Third, get a trading journal. Write down the date, the setup you took, why you took it, and the outcome. I promise, this will be your secret weapon for improvement. This is where most beginners get lost. They try a little of everything and master nothing. So let's break down the 3 biggest trading methods in 2025. Number 1, VSA, volume spread analysis. Focuses on reading the relationship between price and volume. Helps spot where big money is entering or exiting. Best for traders who like reading market psychology in real time. Example, if you see a massive spike in volume, but the candle barely moves, it could be smart money absorbing orders before a big move. Number 2, SMC, smart money concepts. Tracks institutional footprints, liquidity grabs, market structure shifts, and order blocks. Helps you avoid being stop hunted with the rest of retail traders. Works well for traders who like a clean, rule-based framework. Example, price pushes above a key high, takes liquidity, then reverses, classic SMC play. Number 3, ICT, inner circle trader method. Very detail-oriented price action style. Uses liquidity theory, time of day concepts, and precision entries. Requires patience and discipline, but offers insane precision once mastered. Example, waiting for a New York session liquidity sweep before entering at a premium or discount zone. Once you choose a style, commit to it for at least 3 to 6 months. Your plan should cover, when you trade, time frames and sessions. What you look for, your setup checklist. How you manage trades, stop loss, take profit, scaling. Here's the golden rule. 1 style, 1 strategy, 1 market, until you're profitable. Too many traders fail because they hop from one shiny thing to the next. In 2025, you have no excuse not to have pro-level tools. Use TradingView for charting. Use a backtesting tool like FX Replay or TradeZella to practice. Join communities, but filter the noise. Find 1 or 2 good mentors or groups and stick with them. And no, buying 25 courses won't make you profitable. Applying 1 strategy consistently will. Asterisk, once you're consistent, scale slowly. If you start winning with $500, try $1,000, then $2,000. Don't jump to $50,000 overnight. Also, consider diversifying strategies later. Maybe combine SMC with ICT concepts or VSA with fundamental catalysts. And most importantly, avoid overtrading. 1 good trade a day is enough. The market will be here tomorrow. So in 2025, whether you choose VSA, SMC, or ICT, the real secret is sticking to one, learning it inside out, and executing with discipline. Comment below, which style do you use? I'll be reading and replying to every single one. And if you want me to make full tutorials on VSA, SMC, and ICT individually, hit the like button and subscribe right now because we're just getting started.